All right, should be set. Yes, all right, share my screen and all that now. So if anyone wants it, I'll share the little notion. This is pretty much just a summary on everything that I'll be covering today. So the basis of this lesson is going to be covering power 3, open, high, low, close, open, low, high, close, and utilization of 4-hour openings. There are many other openings such as 90-minute, hourly, macros, sessions. Not going to cover that today. Just going to cover this. This is going to be the basics and pretty much sets you up for success when you first started. So, first thing I want to cover, the opening price of every hourly candle. Hourly, 90-minute, can be used in the power 3 concept. If you're expecting higher prices, you're going to be looking for key levels below the opening price for entry, and vice versa for expecting lower prices. So to first understand open, high, low, close and open, low, high, close, first need to understand the basics of power 3. What is accumulation? An area where smart money begins accumulating positions to set a framework for distribution. This tends to happen above/below the opening price or higher time frame objective. Now, what does that look like? Well, this week we had a perfect example of power 3. So, weekly open. Accumulation. And that can be found here. This would be Monday to Tuesday. Following accumulation, we want to be looking for manipulation. What is manipulation? This is where smart money sets up a smart money reversal, usually identified by an inducement, turtle soup, or SMT. Often SMT and turtle soup go together. In the manipulation, we are looking for a higher time frame PD array, a sell stop raid, buy stop raid, and this is a must-have. We have to have this every single time there's a manipulation. As you become more and more experienced in trading, you'll be looking for entries in the manipulation in preparation of the distribution. So what does manipulation look like? That would be here. Specifically, this lower half below the accumulation. So accumulation, we're looking for manipulation below the opening price right here. And high time frame PD array. We can look on the 8-hour BISI, 16-hour BISI, and daily BISI. So that could be a turtle soup, our entry inside of the 16-hour, daily, 4-hour, 8-hour. If you're confident in it, this can be your entry. So following the manipulation, we look for distribution, the final phase of an AMD Power 3, where smart money distributes their positions and we begin to get aggressive expansion. This move is also going to end at a higher time frame objective, such as higher time frame PD array, specifically a premium array, buy side, sell side, or standard deviation projection. So that is exactly what we saw here. Accumulation, manipulation, followed by distribution. This distribution is confirmed off of, what do you think? Either A, shift the market structure, which can be found here, or B, change in state of delivery, where price displaces past the previous down close candles in this scenario, closes above. That is our change in state of delivery, confirming the start of a new buy program. So now that we have the basics of Power 3, we'll be moving into open, high, low, close. Quickly before we do that, I'm just going to play a quick
themselves on a swing trade. Well, this is how you do it, folks. If we're bullish and we're looking for a move below the opening price to get an ideal Power 3 entry, and that's a mouthful. My concept, Power 3, is where we're looking for the accumulation, manipulation, and distribution phase of the daily range and or weekly range. But it also can be utilized inside of the sessions, like the morning session and the afternoon session. Each one of those fractals in time, a perspective, if you will, and framing the price in the context of a specific range of time. Power 3 is when I'm bullish, I'm expecting the low to form below a key opening price, and the key opening price for the daily range is midnight New York local time. So we drive down below that into a old low. So sell side below this low is collected, engaged. Why would that be necessary for the market to see that? It's going to drop down below there to absorb all that sell side liquidity and be counterparty to their smart money longs. So they're buying the sell stops here below the opening price at midnight. So that is where you could have a order if you are a swing trader or non-intraday trader. The way you would do that is you would just have your alerts set to tell you when the market dips below that opening price or gets close to it. If you're bullish, you can put limit orders down there, and then whatever the high you're aiming for, there should be two of them. The high of the day that's formed, and then the target you're reaching for, as we outlined last night, the 4,072 and 3/4 level.
So, more clarification from ICT. Here's an hindsight example. Agent consolidating. This is intraday. Judah swing, manipulation, London session, followed by New York distribution. And here would be a live example. Asia accumulation, London manipulation, followed by New York distribution. How would you use that? Well, this is the same exact play. Accumulation, manipulation. Going into the New York session, we see breaker block. Well, one, we see a change in state delivery, displacement down prior to New York open. What else do we see? Structure's already bullet bearish. We see a 15-minute unicorn for value gap breaker. Standard deviation projections line up with sell side. We can look to enter off the unicorn. Refining our entry down to the 1 minute. So inside of the 15-minute unicorn, we see internal structure buy stops. Well, on 1 minute unmitigated SIBI, as well as OTE levels that align. That could be our target. Obviously here, I did not hold all the way down to standard deviation projections. We don't need to do that. So before going into open high low close and open low high close, I want to confirm, I want to ask if there's any questions. If no questions, if no one's typing, then we will move on to the next topic. All right, perfect. Unless you're asking the main chat. All right. So, fractal candles. If you want to be a successful trader and understand this concept, you need to be thinking about each candle, each time frame as open low high close and open high low close. In order for us to have a buy day, And this could be in reference to, this is in reference to a daily time frame. If we're looking at weekly, monthly, whatever, by month, by week, we first need to see manipulation to the downside before we go higher. If we're still have a sell day, we first need to see manipulation to the upside. Here's what it would look like for intraday or 4-hour power 3. Open 10 o'clock. Manipulation. Look for SMT, high time frame PD array. Then what follows? So, OHLC, these acronyms stand for open, high, low, close. And this is in reference to a bearish candle. And you'll see this in the ICT teachings. So, open, left side for a bearish candle, open, high, low, close. Pretty simple. Manipulation is a run above the opening price. Always note that. And then OLHC, these acronyms stand for open, low, high, close. So this candle opens at the bottom, open, manipulation below opening price, followed by distribution, and then tends to close underneath the high, which gives you this. Here's some more examples. It's 100% fractal. What does fractal mean? Fractal means we can see the same stuff on the monthly, the yearly, as we can see on the 4-hour, the 1-hour, the 15-minute, the 1-minute, the 15-second. It goes down all the way. Price is 100% fractal. So, now that we covered that, I want to quickly give you another example. So, following what we just went over. So, let's go into a bullish one. So, opening price right here. Boom, accumulation. We'll treat this as 10 a.m. Opening price, accumulation. What do we want to see? If, let's say, structure is already bullish, we want to see manipulation 1 below opening price, and 2 into high time frame PD array / sell side. So we see that. What do we want to see once we see this? If structure is already bullish, see 4-hour candle, we see accumulation, manipulation into a higher time frame PD array. What follows this, we want to see as displacement, CISD or shift the market structure, followed by classic whatever, 2022 entry, unicorn, you name it. And that's what it will look like. Let's go into a bearish example. So bearish example, same thing, accumulation. We want to see manipulation. If structure is bearish, we want to see accumulation or manipulation, above the opening price into ideally, well, not just ideally, but high time frame PD array. We'll consider this buy side. Key things to look for here is SMT. If we see SMT during this phase, during the manipulation phase, that is a cherry on top. That is the market taking its hat off to you and giving you a free trade. And this is what you want to look for. Valid targets would be another high time frame PD array or standard deviation. So look for manipulation leg. If you know standard deviation, which I covered in the previous lesson, we target -2, -2.5. Below this, we target -4. And so that is bullish and bearish example. So let's get into some live examples. Actually, before I do that, I want to confirm there's no other questions. So the time, okay. So with power 3 example, you showed a 4-hour power 3 and went on to 12-hour, 16-hour to look for a manipulation leg into an imbalance. Is there specific time frames? Not necessarily. It is all relative to the power 3 you were trading. So if you're looking at the 4-hour candle, if you're looking at a 4-hour candle, or if you're on the 4-hour time frame, anything above that, let's say anything above the 8-hour or 16-hour, it would be considered a higher time frame. If you're on the 15-minute time frame, 1 hour and above could be considered a higher time frame. Ideally, if you're on the 15-minute, you want to be looking at 4-hour. 1 minute, 15-minute and above. If you're on the 1 minute time frame, you look at 15-minute and above. So 10 a.m. opening price, because this, so why specifically will we use 10 a.m. opening price? Because that is the start of a new 4-hour candle. Starting, so each day, let me quickly clear this. So starting each day, the candle starts at 6 o'clock. And so every candle after that is, each 4-hour candle after that is in fours. So 6 o'clock, 10 o'clock, 2 a.m., 6 a.m., 10 a.m., and 2 p.m. So that's why we look at that. You can also look at 90-minute candles, 1-hour candles. Those are also very successful. Power 3. Which opening price will we need to consider for power 3 and AM session? So opening price for AM session, we want to look at 10 o'clock, the new 4-hour candle, and 10:30, the first New York 90-minute candle. And then you can also look at each 1-hour candle. If you're looking at midnight, actually, never mind. Yeah, so midnight open can also be used as a solid power 3. That's not going to be something I'll cover today, as it's not the focus, but yes, you can also be looking at midnight open. It's the exact same thing. What Halo said, price is completely fractal, so we're going to see the exact same stuff. So manipulation is always just going to be into a higher time frame PD array, sell side, buy side, or standard deviation projections, but all standard deviation projections are only projections. We're looking at the PD arrays that align. All right, I'll move on to the next part. So some live examples that I have took in my own time. 10 o'clock opening. So one thing to note here that I did not share, higher time frame was bullish here. Obviously you can see the date, February 12th. So if you look back, you know structure is already in bullish. Well, it was bullish structure at this time. So we're looking at longs. So 10 o'clock opening. This is perfect. We see manipulation down. Oh, old low. See a low running what? Old sell stops. Following that, we see decent move up, not necessarily displacement here because I was so confident in the trade. I was looking at this order block entry. Obviously following that, if you wanted to be more careful, we see right after we hit here, this order block, we see displacement up. This would be your ideal entry. How ICT taught IOFT in the private mentorship, which this to show you. ICT taught it a few different ways in the private mentorship. Like, it's a bit weird. For most circumstances, we look at IOFT as price tapping into a fair value gap, like a single tick before exploding up. But that's not a discussion for today. But 10 o'clock opening, manipulation down, running sell stops, followed by distribution higher. 2 o'clock. This is actually an example from yesterday or 2 days ago, whatever. 2 o'clock opening. Actually, let's just go into that. All right, so yesterday. So starting in the morning, see a strong move up, displacement, followed by retracement down into OTE. Obviously, if you were in the call yesterday, you know exactly where we bounced and why we bounced. But for this example, bounce off OTE, displacement up, wait for 2 o'clock opening. So here, 2 o'clock opening. Don't really see anything clean yet. Structure is bullish, so we're looking at buys. We want to see manipulation into high time frame PD array. So 1, 5 minute or 15 minute fair value gap here, as well as 5 minute breaker block right here. Price bounces off that. Higher time frame PD array, displacement up, discount fair value gap. Obviously you could have entered here, but we got some inducement prior to taking off. Here, 10 o'clock opening, manipulation higher, SMT at these internal structure highs, displacement down, IOFT hit it a single tick. Very few, if depending on the broker you're on, you would have got filled or not. If you didn't, could have also got filled off this inversion. So 10 o'clock opening, manipulation, SMT, displacement down, higher time frame objective. Then I'm not going to cover these, but just extra examples. Classic buy sell day, open, manipulation below opening price, distribution high. And that is about it for this lesson. So after everything you just learned, if there's any last minute questions, please let me know. Obviously for myself, it's a fairly basic lesson, but if there's any questions, comments, concerns, please let me know. I'm going to be sharing this in case anyone else wants it. And I'll make a new YouTube channel and start posting these lessons to it. No, I've not even made a YouTube channel yet, so no, I'm not. Alright. Hope you guys all learned from this. And oh yeah, biggest thing you can do from here. So now that you learned this, now that you have this in your mind, now you need to back test, forward test, and start collecting data on this. Obviously I can teach this all I want, but if you don't collect data, if you don't see this in the live markets, it won't do you any good. So review this week, see how you could have applied it, and then going into the future, look at how, well, going into the future, start looking at each candle as open high low close and open low high close, and start applying this to your own trading. It's going to come through experience and repetition. Yeah, wherever I do post this channel or post this video, I will add to the announcement channel where I do. I started in it was like mid 2020, I would say. And then got into ICT, I mean, fairly soon after that, maybe a month or two into when I first started. But quickly stop this.